You know that bell. It is closing time at the New York Stock Exchange. Unfortunately, it wasn't a great day for the stock market. The Dow Jones fell about 300 points.
Meanwhile, the S&P 500 and NASDAQ fell roughly 1%. So we're seeing some pullback now. Let's speak with Kristin Myers about this. She's the editor-in-chief of the financial website, The Balance. Where is she? There she is. Kristin, great to see you remotely. We really enjoy it when you come and join us here on set as well. But give us the scoop. What's driving the market today?
Yeah, so what we're seeing today is essentially markets having an absolute temper tantrum, really, as you're mentioning, the Dow dropping about 300 points. And that's really because what we saw today was good news becoming bad news. And I know you're thinking, I don't even know what that could possibly mean. But we essentially got some economic data out today, two pieces, one on jobless claims that fell 19,000. And then we actually had private payroll. So that's private employers adding back 235,000 jobs in the month of December. And that is a blockbuster number because that's compared to 153,000 jobs that essentially economists were expecting. So that should be really good news. But here's the problem. If the labor market is really strong, the U.S. economy is really strong. I know this is still good news, but when it comes to the Federal Reserve, that means the Federal Reserve has essentially more wiggle room to really hit us with more and more interest rate hikes, which investors really don't like. So, of course, once they see these job numbers being really, really strong, they say, uh-oh, the Federal Reserve is going to give us even more interest rates. They're going to get even more aggressive in the future. And that's why you're seeing stocks take that leg lower today.
Kristin, I'm wondering if there's anything else that we can do in the economy to try and mitigate the effects of inflation, given these continuing good numbers, because you want, in many ways, like you say, you want jobless claims to be down. You want employers to be hiring. This has been happening now for several months of just sort of good sustained news that then doesn't help out the Fed when they're trying to lower inflation. Besides that, is there anything else that the Fed might be able to do, or are we just sort of got to get used to a strong labor market and inflation?
Yeah. So when it comes to the Federal Reserve pretty much has two big tools in their toolbox. And the main one that they use is essentially raising interest rates or cutting interest rates to really either slow the economy down, which they're trying to do right now, or help the speed the economy along. They would be cutting rates if they were really trying to boost the U.S. economy. So that's why you're really seeing a lot of these interest rate hikes taking effect. They've essentially said that the U.S. economy has been overheated. It's a runaway train right now, and they're really trying to slam the brakes on that train because, as we're seeing, when we go to the grocery store, whenever we want to go buy a new piece of clothing, if we want to go to a restaurant and have some food, we are spending so much more money, and so it's causing economic pain. So unfortunately for us, it means that we're going to have to feel a different economic pain instead in the form of these higher interest rates. You're going to feel it if you want to buy a house. You're going to feel it if you want to buy a car. You're definitely going to feel it if you have any credit card debt. And that's essentially what they have to do to really bring that inflation down.
And so as we wrap up, Kristin, what would be your outlook for the year? Some economists will say, you know, as goes January, so goes the economic year. Who knows if that's actually factual? But how can we interpret what we've seen this week to what the rest of the year may bring?
So when it comes to 2023, unfortunately, so many things have happened over the last couple of years with the pandemic, with this new economic environment that we're in right now, that we really almost can't rely 100% on history. No. So for anyone that is watching, what I would say is grab your seatbelt, buckle up. It is definitely going to be a pretty bumpy ride. The U.S. economy might tip into a recession this year. You're going to want to prepare for that. Do not panic, however. It shouldn't be too long or too protracted or too painful, but this is definitely something you're going to want to prepare for. Prepare to see that roller coaster ride in the markets with the stocks this year.
All right, Kristin Myers, thank you.
Thank you, Kristin. All right, folks.